Hello everyone. We are starting our trading week as usual with a trading review where I will discuss changes in my plan, in my thoughts, which I basically talked about last week. And today we will also deal with the news background, which we will start with. So regarding the news, this week we will have the PMI on Friday. There will also be Trump will be telling us something on Tuesday. And basically, it's a decent week for news drivers, but basically, if we base it on the experience of the past month, we should now pay more attention not to microeconomics, but to geopolitics, and Trump's statements regarding negotiations, tariffs, and so on. Therefore, in this regard, we, of course, do not rule out this news, but we understand that the main reaction might not be due to this news, but rather due to some statements by Trump or other presidents. So, let's proceed to analyze the chart and start with the DXY. What basically happened last week? The price remains the same for the month, moving towards our main target in the form of this FVG, meaning the price completely filled this imbalance from the seller's side, after which it reacted towards this FVG. If we look at the weekly time frame, the situation, we can say, is even a bit better. What happened? The price is starting to create something like a descending order flow, where the price initially moved upwards, then changed direction, testing some zone from above and moving lower. In doing so, breaking the resistance we discussed. And in principle, this area will now serve as the nearest resistance for the price. Upon testing which, I will expect the reaction. That is, if the price enters this zone, I will expect a reaction towards our main target. Therefore, our plan remains exactly the same, only with the additional formation of a new support area for shorts. So, we have an additional zone from which we will be waiting for a reaction. The situation with the euro, what happened last week, what changes I am making to the current plan, and what we expect. In this case, the price is still reacting to the monthly FVG, with our potential target being the monthly FVG from above, and accordingly the weekly fractal. As expected, the price reacted from this zone, which confirms our assumption that buyers dominate at these levels and demand prevails over supply. Now, what do we have in principle? It happened, the price created this aggressive upward movement, which kind of indicates buyer demand and a primary indicator that, in principle, the trend may locally shift to a potential correction towards our main target. So far, the price hasn't reached, you could say, any target, as it hasn't reached this double bottom and, accordingly, the weekly fractal. Therefore, in this case, it's too early to talk or heading towards these targets. We must at least reach the first problematic area in the form of this double top. Why? Because this double top is located in the seller's zone, meaning it's a seller's zone where the seller prevails. The seller, and it can be said that, in principle, this zone can become problematic because the provision of liquidity from the seller after the fractal is removed can, in principle, be and act as a trigger for the continuation of the bearish trend. Therefore, this problematic zone is key, and in principle, depending on how the price reacts to this fractal, we will be able to build our plan on where, in principle, the price will go in the direction of our main target. Therefore, we now have potential support in the form of a PWH, from which the price can locally bounce precisely in the direction of this fractal, and upon reaching it, we will observe the reaction. Or will the price continue the upward trend, aiming to refuel the movement, or will the price break through? This mark is quite sharp and will create some new support areas that will act as support for the price within the framework of this upward trend. Therefore, for now, the nearest target and the closest zone we need to watch is this double top, the reaction to which, in principle, will be key in making our decision. As I mentioned, I initially took positions from this zone, after which I closed them, as I was expecting a refuel, after which we will go higher. We didn't see this refuel, and in principle, there's nothing wrong with that. That is, I am simply expecting better technical indicators, and perhaps, in this case, it would have been better to just move the stop to break even and wait for the achievement of some targets, but in principle, nothing can be changed now. Therefore, in this case, we will watch closely as the price is in a resistance zone, and it might now get a reaction, potentially to short. So be careful with longs. Also, after reaching this fractal, be cautious with longs and closely observe the price reaction. So, let's move on to the pound. The situation here is much simpler. I have described it more than once already, what has happened. So, our target is basically similar to the euro and DXI, that is, reaching the weekly fractal and FWG, but everything is much simpler here. Why? Because the price is removing the fractal, creating a rejection, which indicates an objective buyer demand at these levels, as the price creates such a strong buyback at these levels, after which, on the weekly time frame, the price tests the weekly FWG, from which we received a reaction in the direction of our first target in the form of a fractal. That is, the price is already reaching our first target. At the same time, thanks to last week, the price creates a new support area on the weekly time frame, which, in principle, becomes support for the price in case of some correction. That is, if there is some correction, then reaching this zone will serve as support for the price, and I will be expecting the achievement of our main target. That is, on the daily time frame, I indicated that we also had RB, and in principle, you can see the trigger removal both in the previous review and in the Telegram channel. I indicated that the removal within this RB of this fractal will be key, and after which we will essentially get a reaction, which is basically what happened. The price, removing this fractal, gets a sharp expansion in the direction of this fractal. If we base it on the current situation with the euro and DXI, we can now expect a correction downwards towards this MTV zone. Basically, it would be logical, since the price synchronized and reached the fractal, that is, the first target, after which it would be logical to see a pullback to the support area, after which we will see the continuation of the trend towards our main target and its achievement accordingly. Therefore, the pound looks very good from a technical point of view, and I like how it has been moving lately. Therefore, the plan has changed a bit, but the directions and targets remain the same. So, now let's deal with gold. Gold is creating bulk, we can say, for the first time in a long time, some resistance at these levels. As we can see, the price has been moving for a very long time. Let's take a look. For almost 50 days, the price has been moving in an upward direction, practically without corrections. We are seeing formation of a weekly FVG, which is a strong support for the price. And this indicates that it's not a fact that the price is now ready to reverse. And possibly the key figure for the reversal will be 3,000, as even the value of 3,000 is a strong enough resistance, since people will already understand that gold is already too overvalued. From a technical standpoint, we might have some sort of local correction with refueling, possibly due to this low or this low inside the weekly FVG, after which we might see the continuation of the trend. But for now, it's too early to assert this, as we need to observe the price reaction, because if the price moves in such a tone, that is, moving with just huge sticks, lower, then there will be no talk of any continuation of growth in principle. Therefore, we simply note the nearest support areas for gold. The price is moving quite aggressively, testing local areas, somehow removing liquidity and moving towards just new all-time highs. Therefore, one can simply trade with the trend and not think too much about a reversal. In this case, the price may indeed create some nearest support area for a short, from which you can actually get a reaction above. So, lastly, or in principle, concluding for us, will be silver. What we can, in principle, note for ourselves, silver looks much more bearish than gold, because the price firstly moves less aggressively. The price creates a clear premise that the price should go for a refuel lower. As we see, there is a repeated rejection from this weekly fractal. That is, here we have the first weekly rejection, then we see the second one again. And in principle, the price is now in the current seller's zone, from which the price can receive a potential reaction. But I would still consider positions only after the break of support. That is, in this case, we see a current uptrend, a current upward order flow, where the price simply tests some key areas and moves higher. It tests the key area again. It goes higher, so I would like to see a break of this support with the candle body closing, after which we can already talk about a violation of the upward order flow and consider some positions. Because for now, one could say that considering any positions is already pointless, since firstly, gold is moving in an upward direction, and we need to essentially refer to the fact that the price must break the upward order flow, just as silver must initially break the upward trend, and only then get you some correction or the emergence of a new downward order flow. Because we have, of course, good targets below. We have compression. The price doesn't really remove liquidity much. It just tests the support areas and moves in an upward direction. But where will it turn around? We don't know yet. Although, actually, if the price creates a good setup this week, meaning it breaks this support, then in principle the setup will be very good, since there is compression. There is, on the senior time frame, a good damn narrative. We have good variables for short. We have two rejections, which indicates dominance from the seller's side. And in principle, if we look at the Friday foot candle, we see that it started to be sold off quite sharply, and therefore it remains only to see confirmation on the daily time frame, and after that consider short positions. In principle, I would conclude here. Any updates in my plan or thoughts, I will publish on TG, meaning Constant Analytics. I always publish there my analysis, my thoughts, and therefore you can subscribe constantly, keep up with the news and changes in my plan. Thank you all for watching. If you liked the review, give it a thumbs up. You can write some comments, ask questions, and have a great trade.